So, hello everybody. Sorry for the delay. We had some technical problems. Martin somehow cannot hear me, so I'm just going to introduce him. I think many of you know him already because a lot of people got invited by him directly. We also have a big audience here from our German users here in Europe. Yes, well, we are working together with Martin already since quite a long time, and we are very happy to have him on board because what he's doing is really high quality. We developed with him a range bar package, which he's going to introduce for a few minutes or for quite a while now. Yes, we worked on this package quite long already, since about, I think, half a year or even longer, to get really here a package out there which exactly shows his style of trading in technical signals in his environment and so on, so that really this package fits his style of trading. Yeah, I just would like to pass over to Martin now. Martin, I'm giving you the control. Just a moment. So you should see a pop-up. Just confirm it.
All right, 1 second. No pop-up yet. Oh, I'm going to hit show my screen, okay?
Yes. Just a moment.
Change presenter, Martin Rimes, okay?
Yes. Yeah, now you are there. Okay.
Okay, wonderful.
Then many thanks. Have a lot of fun with Martin now for the next, I think, 1 hour. How long is it scheduled, Martin, approximately?
Oh, about a little over an hour.
Okay, great. Yeah. Okay, good. Then have a lot of fun and enjoy this hour with Martin Rimes. Many thanks.
Okay, so Gilbert, I just want to confirm which screen you're seeing, okay?
Yes, currently.
Which screen do you see?
I see they go to webinar.
Perfect.
Yeah.
Okay, great, wonderful.
Good.
All right. Wow, we get through this. I want to welcome everyone to our discussion today. I appreciate you taking time out of your day. Gosh, I'm really excited to show this because it's the culmination of everything that I'm using, everything that I'm teaching, everything about trend and momentum. It's all in one package, and I'm very excited that I can share this with you. So, I want to thank Gilbert and AgenaTrader, not only for the commitment to trader education, which is greatly appreciated, but in providing this cutting-edge trading platform which raises the level of expectation in trading performance. I cannot emphasize that enough. And I believe there's going to be a follow-up meeting on Thursday where Gilbert can go into the details, or someone from AgenaTrader, the details of this software, which, quite frankly, is and I've worked with a lot of these packages, and this one is absolutely the closest thing to working as a professional. So in today's presentation, I realize that I have some people who are familiar with my methods and some people who are not. So I'm going to try to blend the two together because I really want to talk about showing the next level of trading education where the power of trend and momentum is placed directly on the chart, where we have specific entries, specific protective stop, and trailing stop suggestion. Okay, these are immediate ideas for testing using the AgenaTrader platform. I want to start with a brief overview of trend and momentum trading, and then I've got extensive charts to show you the methodology, and not just, how we trade, but also the use of this RimesRangeBarSniper package is just, well, seeing is believing. We're going to talk about demonstrating a trailing stop, and what this makes you is a semi-automated trading environment. And that's very important because a lot of people are not comfortable with an automated trading program, but yet they want the next closest thing. Let's remember that we're all adults here. Trading financial instruments using contracts, stocks, or options is extremely risky. Only trade with money you can afford to lose. Past results do not guarantee future results. Please consult a licensed professional prior to trading using real money, and paper trade to learn any new concepts. Paper trade regardless of your level of expertise. Briefly, for those who do not know me, I've been trading for over 25 years. In 2008, I launched Hit the Mark Trading. It's a teaching newsletter with trade strategies. In 2013, I put that into a video format. I do 4 intensive boot camps on position trading. And then we started in May 2015, highly intensive day trading immersion with a live room for real-time practice. And it's everything from the day trading course that we put into the RimesRangeBarSniper. I've had various indicators experience. I've traded almost all the different major instruments out there, including Japanese bonds before. I've spoken at trading conferences and provided numerous webinars for traders promoting a relaxed, simplified method of trading. Now, this is who's speaking to you. This is me. And that background is just outside of the house. Here's my trading room, okay? Important to have a nice, comfortable working environment. Everything about what I do is to be very straightforward. Keep the trading simplified, whether you're day trading or position trading, and understand that day trading is the most demanding. So you must keep your trading simple so that you can react. The professionals are using simple methods. It is the retail trader who gets all clogged up with so many indicators, okay? So in everything we do, we look at the charts with an all-encompassing point of view, price action, trend and momentum. We do use a price oscillator. And for the trading in the 21st century, we must look at market linkages. Before I forget, if you're interested in my morning free for 30 days, my morning brief on what's happening for day trading, for anybody, but especially for day traders, you can go to Hit the Mark Trading and sign up for this. It's just 30 days free. But let's talk about our feature presentation. Now, what is momentum trading, okay? Momentum trading is the art of spotting a market ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. Momentum trading builds off a firm understanding of support and resistance along with known areas price is attracted toward moving. So we are trading directionally up or down, riding the price wave rather than reacting to what might happen. This is usually accompanied by a price oscillator. And we do this for intraday and short-term trading, whether we hold for a few minutes, few days, or few weeks. Today, we're talking about day trading. Now, to determine trend, intraday should always look at the daily chart for big picture and use short-term charts for tactical entries. The more volatile the market, the smaller the time frame you can use. Now, markets move in 3 directions, up, down, and sideways. So if the market is sideways, we have to understand this. that we're going to be severely challenged unless the range is large. So it is absolutely imperative to find moving markets. In the charts that I'm going to show you, thankfully, we've had some really good range, and I think you're going to like what you see. But there are periods where markets go quiet. For example, the first 2 weeks of August last year, trading equity index futures, I went in drawdown on that, right? This year, didn't trade them. Guess what? This year, they were very, very tight. So you must look at other instruments that are moving. So this year we traded crude and gold primarily. Now, I want to tell you about this oscillator we're using in the RimesRangeBarSniper. But remember that oscillators derive their power from price movement. So for this reason, you really need to understand how to read price action at support and resistance levels. The oscillator can then provide a trigger point for entry. So this is what most traders look like when they're trying to figure out which oscillator to use. You remember the story about the blind man and the elephant, right? So, you know, maybe one of these guys is saying, oh, this feels like MACD, and another guy says, well, this feels like RSI. Well, this guy says, no, this is volume. I'm sure this is volume. This whole thing is volume. Someone else says, well, it's slow stochastic. Everyone has an opinion on what is the best, right? That's not new. So tons of oscillators exist, and everyone has their personal favorite. In the beginning, I've looked at slow stochastics, MACD, Williams %R, RSI. I had the Bollinger Bands going on there. But at present, I only use one indicator after years of trading and my desire to simplify. So I use the commodity channel index called the CCI. Now, don't worry, I'm going to show you this. But let's have an understanding. In a strong momentum market, all price oscillators work. Everything works. In a tight range market, all price oscillators lose their predictive value, and I'm talking about all of them. So this is one more reason to monitor several markets looking for momentum. Now the CCI is a price oscillator created by Donald Lambert. In a moving market, the CCI is shown to lead price. Do not take my word for this. Check out John Murphy's explanation in his book, Technical Analysis of the Financial Markets. Now, here's what you want to focus on. Let me get my highlighter here. I can't seem to highlight this. Whoops. The last sentence, next to the last. Notice that the CCI turns before prices at the top and bottom. Notice that the CCI turns before prices at the top and bottom. Wow, for day traders, that's huge. Absolutely huge. There we go. Try and just highlight this right here. CCI turns before prices at each top and bottom. So what he's talking about is here the CCI is going down and price is going down. Going up, price goes up, down, down. Okay, but the CCI is leading this. I wonder if I can get rid of these beautiful marks. Okay, so the CCI is a price oscillator, and all you need to know is that we're comparing price with a simple moving average over a selected time span. Mr. Lambert suggested 20 days. Others modified Lambert's suggestion for intraday use using 14, 6, and 5 period. So all of this is calculated in platforms. All you define is the period. I will show you the calculation, but if I look at this too long, my eyes will glaze over. Okay? This is all done by your software package. What you need to know, and why this helps visual traders, okay? The CCI is plotted on a histogram. 0 line represents major support and resistance. The 100 and 150 line represent minor support and resistance. We're going to talk today, I got a picture coming, about the diagonal trendline break. Very powerful, auspicious. My rule, start drawing from plus or minus 150. Okay, it's a simple concept. It's a wonderful tool. So let's just look at this. Here's the 10 range bar ES. Now this is range bar. What's range bar? It means that the price bar, before printing the price bar, price must travel in a range of 10 ticks, and then it will print the price bar. So let me grab another tool over here, Spotlight. So all we're saying is that if we have diagonal trendline break, we expect price to go up. Well, boom, there's our signal, and up we go. Okay? Diagonal trendline break, and there's our signal, and boom, down we go. Okay? Diagonal trendline break, went down a little bit further. Okay? So this is greatly simplified because I really want to show you about this teaching package. But this is all we do. It's simple. Now, this is diagonal trendline break is maybe 50% of what we're using. But immediately you can see the concepts are simple and you can react. Now, in case you're wondering what all this blue line and this red line business is, this is a trailing stop. So essentially what happens is we get the signal to go in, so you can see a signal right there where I've got the ball, and then another signal there. That means, wow, that's a 2-for-1 special. Take that trade. And so boom, up we go. Well, people don't know when to exit. That's a problem. That's a big problem. And I have a friend, 3-tick Charlie. All he wants is 3 ticks out of every trade. Very, very happy guy, because all he takes is 3 ticks. But how can you really expect to grow if you see these kind of moves and all you take is 3 ticks, right? So the trailing stop is designed to keep you into that trade, and it's the best thing I've ever seen. Okay? It keeps you in the trade. You define it, whether you want to get out here where it touched, or whether you want to get out here where we actually broke and closed below the trailing stop. Now, how else can you capture such a move? Remember, each bar is 10-tick range, so these solid bars, that's $125, right? Wow. Okay. Now, because I'm speaking to Europeans, I do want to show some of these that have an early morning time. Americans are asleep at 4:38. Europeans are rocking and rolling. So once again, we get the signal. Trailing stop kicks in. And you're in that trade until right here. So from 4:38, another signal at 6:45. That's where you have the opportunity to, if you missed this entry, you get in there, or a wonderful place to add on. But then all of a sudden, here you are, you're being told, game over. Thank you very much. And people say, well, why didn't you hold and go, why didn't you catch all the move? Believe you me, this is a great run. The thing about day trading is you never expect to enter the trade of the century. The day trading is a fast business. You're in and you're out. What the trailing stop does is say, look, conditions are such that I believe you should stay in longer. That's what the trailing stop is telling you. Okay? Now, For intraday use, we're going to use a 14 CCI setting from the default 20. In other words, the chart package will default to 20. You change that CCI to 14. You remember, small time frames in moving markets with good range. And you want to trade, I believe, during rush hour instead of all day. Rush hour is the first 2 hours of the day. And then we always expect an afternoon move. Now, this diagonal trend line break, you know, there's 4 other CCI patterns I teach and use along with other robust setups, filters, and nuances. But 50% of the trades are accomplished with using this diagonal trend line break. Now, we don't take every one of them, but for me to go into the filters and the nuances will take me more than 1 hour. I'm sorry, it's too much. But what you can do is immediately start testing the diagonal trend line break, and everyone who sees this, who takes the time to test on their own, is absolutely, totally impressed. So this is something you can immediately do. Start drawing the diagonal trend line from plus or minus 150. Better trades are in markets showing momentum. Use a 14-period CCI for intraday use below 60 minutes. Now, I want to talk about this entry business. Because we are working with small time frame charts, we can use the confirmation price bar. Unless the trend is really, really strong, use confirmation price bar. Now, last week in the live room, it's great. I did not use confirmation price bar. It looked like, oh, this bar is going to print. I took the trade live in front of everyone, and at the very, very last minute, the trade completely went against what I thought was going to happen. We did not confirm, and that's the benefit of using confirmation price bars, okay? I mean, look, when you're a trader and you're discretionary trading, it's very difficult. When I use confirmation price bars, no problem. The day that I try to short circuit the system, I am quickly reminded by Mr. Market who the boss is. What about counter trend trading? Only after you have mastered trend trading. Now, protective stops. I used to say, and I teach, and there's nothing wrong with this, but place a stop below the trigger price bar prior to your entry. If you're going to go long. If you're going to go short, place the stop above the trigger price bar or the previous price bar. But with this RimesRangeBarSniper, we've modified that a bit. The RimesRangeBarSniper, we're using a little bit of swing theory to work an initial protective stop. Now, the key word here is initial. Use of trailing stop using a logic of larger initial stop. That just means when you use a trailing stop, but initially it's pretty wide, followed by tightening of the protective stop as the trade moves in your intended direction. This is what gives you the power of staying in these trades. Now I want to just show you, this is yesterday. I was working on this presentation and the market opened for soybeans, Sunday of course. So just to show you, before you get scared away on this, for 2 contracts, and this is just one example, I mean others are not this large, but for 2 contracts, let's just look at this AgenaTrader order screen. This is what pops up. Okay, so over here on the left, I get a signal, right? I'm monitoring all of these different instruments. And there's my signal, soybeans. Okay, I click on it. If it's green, that means it's a long trade suggestion. And it comes up here, and you predetermine how many contracts you want to trade. So if I'm going to trade 2 contracts, he wants to use $225 stop on each one. Initial. That's critical. Initial. So the first profit will take off at $100. Second one at $225. Or you'll get, let's say it goes up, and as we start moving up, trailing stop gets tighter and tighter, so then if it pulls back, you don't take the big hard stop loss. But let me show you how this was figured, okay? This was a 5 range bar. If I go to the 10 range bar, you can clearly see how the stops were arrived at. Basically, the AgenaTrader software looked at what the lows were and looked at where these highs were and made an intelligent decision that, instead of reaching for the, we're not going to reach for the stars here. We're going to go for what this market is showing you over time it wants to do. All right, now in my teaching, this is why we put this in there. In my teaching, I always say the same thing. Whoops. I say, let me get my line. I say the line holds until it doesn't, okay? The line holds until it doesn't. And then what are they doing here? They're simply banging it. This is regression trading right now, okay? They're simply, this is all the computers are doing this, just banging it back and forth, right? That's all they're doing. So we figure out what they're doing. And rather than put some profit target way up here, we say, what is reasonable? What's logical? And what is so amazing is, last week, in the live room, I am just as surprised as my students when we see the YM make $500. It's like, you mean this thing's really gonna? You mean this is really gonna fall $500? So look over here. That would have been a nice signal, wouldn't it? Absolutely. Absolutely. 1 cent in soybeans is worth $50. But this is just to show you how we arrive at this protective stop. It's great. It is absolutely logical. Now, let me get over here. Of course, there's several profits to choose from because you're the trader in command, not me. You can use simple profit targets. My friend, 3-tick Charlie. I have taken trades in the live room, and maybe the first target on let's say gold is, maybe the first target's 8 ticks. And we only hit, it's a tight market. We only hit 7. Maybe we get top ticked. But the people working as a day trader for 5 ticks, for 6 ticks, are consistently seeing they are getting filled. Okay? So I have no problem with whatever profit target you choose. And if you're like my friend, 3-tick Charlie, the man trades with a lot of contracts. You can use a CCI exit. Start turning, if CCI starts turning at the 150 line, crossing back towards 0 line, if you're long, this is your first shot across the bow. Hey, where momentum might be weakening. So this is a place you could take take a profit, or wait till the cross of the 100. So let me show you that. This is gold, 10 range bar chart, okay? Gold, gold, all that glitters is gold. First off, Just a few beautiful little trades here. My gosh, look, oh my goodness. Ooh, absolutely. Okay, just wonderful. That's all you can say. Just wonderful. So let's just look at, suppose you were long here at this 1233 entry, okay? And you see your CCI, and I'm looking here at the, I'm looking down here now. You see your CCI, okay? And it crosses the 150 line. Okay, you're being told right then, hey, be aware momentum might be leaving the party. And then, of course, there's the 100 line cross, okay? So yes, you can use your indicator to tell you to get out of the trade. Or you can use the protective of the trailing stop. Now the trailing stop would have exited right here. And some people say, well gosh, you know, you missed all of this right here. Let me tell you, there is no perfect trading system. And anytime you look, remember these are 10 range bars, so a full bar, what is that? It's $100, right, on gold. That's a huge move. Anytime you say, hey, how good does it have to get? You can always exit whenever you want. The gamble on the trailing stop is that it will keep you in the trade longer than you normally would have the power, the mental nerve to stay in. Okay, that's what it's all about. Some of these signals are simply fantastic. Okay, you know that, you see it. It's unbelievable. It's everything that we teach. Now, okay, well, what's that signal? Well, diagonal trendline break right here, right? Whoops. Okay. Obviously, we're using some more filters. But just the basic diagonal trendline break, great. I think you should test this. All right. Now, one thing about the system is that it is robust across any instrument. What does that mean? That means if you're going to trade Forex, let's say you trade the pound US dollar, or you paid the trade the euro yen, or whatever you want to trade, it's going to work. Any chart time frame, what's that mean? Well, if you don't want range bars, or you're not used to range bars, or you've traded volume bars all your life and you're not about to change, I respect that. The mark of a robust trading strategy is that it works across all time frames and it works across all instruments. The reason we have such strong correlation in the markets today, for example, between crude and between equity index futures, right? Or you say, gosh, why did the grain market go up, right? And then you see, well, everyone got caught in risk on environment. The machines are using similar programs. And this makes the correlation between various instruments quite strong. So when we see that our instrument is very robust, on any instrument, our strategy here is robust on any instrument, on any time frame, we're acting like the big boys now. And I want you to know that it's been proven empirically that activity-based charts are better for day trading than time-based charts unless you are in an extremely slow market. Okay? Now, I have a lot of charts to show you, but first it's important to have no-go rules. So I put the no-go rules in the RimesRangeBarSniper system. Okay? I'm not interested in taking a trade if the range is around 200 to 250 bucks. I do not think you can actually successfully trade that, because by the time you get in, and you hit that enter order, the range is so small that maybe it goes up 3, 4, 5 ticks, and then boom, they slam it back down. So I realize I must let price resolve this issue. Now, if the range is, say, $300, then the RimesRangeBarSniper is going to take the trades and get caught in that. Okay? But as a very general rule, and this is what you need to prove to yourself through simulated trading, we do not expect to see more than 2 losses in a row. Now that's huge. That is huge. When you see a tight range, we tell ourselves we have to let price resolve the issue. Because in a tight range, your oscillators are going to give you false signals. You can get chopped up. Now, momentum traders believe they're in for the long haul, taking a series of trades, converting to cash quickly. Runners are for longer-term moves. It is best to save your money to where you can trade multiple contracts rather than trying to pin your hope on trading a single contract. That's my opinion. Paper trade prior to using any real money, and understand that your ego and your mind, right? This is your ego and your fear. Your weakness is a reminder of what you must avoid. Now, quickly, day trading, fast action, fast profits or fast losses, you must react. Trade with clear charts. It does not help one thing in day trading if you have 5 or 6 decision points and you say, okay, well, I got my Bollinger Band, yeah, okay, I got my slow stochastic, yeah, okay, well, RSI is telling me this, yeah, well, I got the MACD telling me this. No, forget it. You're going to be late. You linger, you're going to miss the trade. Now, day trading is not position trading. It's a reaction game. Focus on day trading, knowing that you have a trading edge over time. You don't judge your day trading by a single trade or a, day's trade. Day trading is never about the results of an individual trade. It's never about the results of an individual day's trading or a week. Okay? This is what they call drawdown. I'm just trying to get you a little bit realistic in your expectations. The number one concern of a day trader is, what does your system look like over time? So consider a 3-month look back minimum. Okay? Because markets change. Now, I just want to show you this chart. I like to show this chart. It shows you 2004. Okay? This is an extremely tight range. On the SPY, this is, look, 107 to 115. I'm sorry, really 108 to, it's 108. It's an 8-point range. That's it. Extremely tight. Hellish trading. It got tighter the next year. Awful. And all the moves happened during European trading. U.S. traders, it was absolutely awful. 6 ticks was wonderful, and the biggest run might be 12 ticks on the ES, or maybe 15 if you're lucky. In most of 2006, we were sideways. So I'm just saying this to reinforce that you must be aware of what is moving in the markets. For day traders, this is a numbers game. What does that mean? Well, it means you're going to get in and out taking a series of trades rather than putting your hope on a single trade of the century. And when you are mature about this, then suddenly it doesn't matter if you miss a big move, okay? Because there will always be moves, always. Experienced traders in day trading know that we are like a mouse under the banquet table looking for crumbs during all that intraday trading noise. Intraday trading runs price up and down. So the day trader has trend and counter-trend trading strategies capturing these moves. Now let's just take a look at one of these AgenaTrader charts. Let me go back here for 1 second. You can set your AgenaTrader up to only show you, all right, long trades. Have another chart that only shows you short trades. And that way, you're not going to be tempted. You're going to only follow the trend. You can visually see is price moving up or down. And then you just follow the signals. How easy is that? How easy is that? Okay, let me get back to where I am. Don't worry, I've got a lot of charts to show you. Sometimes you get the perfect signal, but you can't pull the trigger, or by the time you pull the trigger, you've waited too long. Been there, done that. Okay, let's just take a look now at some of these charts I've got set up. I want to go through a lot of these. Now, I have not hand-picked these. I simply worked on this last night, and I'm showing either Friday or last week's activity. Let's take a look at the crude chart. If I can pull it up here. Now on crude, this is your 10 range bar chart for crude. Let's talk this. At the bottom where it says entry, you know what is discovered there? Hey, this is market structure. Well, what is market structure? This is old classic trading here. Market structure, you have a low, you have a high, you have a higher low. What's the entry? Break the high. Now look here, trail touch, no exit. If you want to set this up where you exit on the touch, no problem. But I think it should be market if the bar closes below the trailing stop. So what a beautiful run. Now this is the 6 o'clock it looks like this thing started. We always expect a move in crude in the 7 a.m. hour, 9 a.m. hour, and the 2 p.m. hour, Eastern Standard Time. Okay? Here's where we exit. So at this point I have to ask the question. I'm sorry, wait, no. Here, yeah, we almost closed there, but we did not. Here's where we exit. So do you like it or do you love it? That's the question. Here's a trade. That's, I don't know, 2117. Now the 10 range bar chart is great in a moving market. Otherwise, yes, it's thinking it can cut you. So for that reason, sometimes we look at a 20-bar range chart. Let me just show you the 20 range bar. If anyone's asking questions, I'm sorry, I want to take the questions at the end. I get so involved in talking. Now this is 20 range bar. What does that mean? Each bar travels a range of $200. 20 ticks before it prints. Okay? So what that means is for example, this price bar right here, it traveled a range of 10 ticks before the thing printed. As long as it does that 10 tick range, it's going to print the bar. But I don't care if you want to use volume, time, Hankin-Ashey, Rinko, whatever. Or I traded Euro and crude and Russell 2000 for years using the 512 tick chart. Okay? I just like the range bars because it's one more way price is telling me, yes, I'm ready to move. Okay, so here's a trade here, 10:45 a.m. short. Here's the exit. Okay. Now notice at the bottom here, you're getting signals. Okay. This is telling you, hey, there's a signal. Look at the chart. And what we find, because there are 16 criteria, okay? 16 criteria. Whenever you have cluster, this is very important. Whenever you have cluster, you're being told, hey, we want to break out. There will be a move of an imminent breakout. Okay? What are the 16 criteria? Everything that I've learned in the years of trading, all the nuances, all the filters, the price action, the indicator, everything. Stuff that it's intuitive when you have watched the screens for thousands of hours like I have, but when you are a beginner trader, it's hard to get that in your subconscious mind. So I tried to put it on paper or in a program. All right, so where did this guy exit? Right here. Okay? Again, 20 range bar. So what we say is we'll watch the 20 and use the 10 range bar for tactical entries. That's what we do as discretionary traders. With this RimesRangeBarSniper, we follow these arrows. What's the arrows say? And then you look at it. Makes sense. Boom. Enter the trade. Okay. Now, I know there's some people out there that are trading 5-minute chart. I got no problem with that. So let's just show you the 5-minute chart. If I can bring it over here. What's the problem with a 5-minute chart? Why am I so against it? I'll tell you a true story. I put a group of guys together, about 5 or 6 of us, and we stopped trading for 1 year. No income coming in. For 1 year, we focused on automated trading strategies, and the first thing we did was trade the minute charts because that's what we were taught. That's what we were taught, okay? And what you quickly learn is that the retail trader is at a huge disadvantage, absolutely huge disadvantage to the professionals. Thankfully, now this was back in around 2000 and I guess 2004, 2005. We proved beyond a shadow of a doubt empirically that the minute charts were not good. Obviously, in a big move, everything works, no problem. But what we found was, you might get an entry signal, and when you get your entry signal, you get a huge bar that works against you, the next price bar, and you get knocked out. And one of the reasons that I'm so attracted to this AgenaTrader software is because it does level the playing field as far as the source code is extremely efficient. This thing, let's say you decided to trade stocks and then you're also trading futures, day trading, you're trading forex, you can have up to 3 different feeds of data coming in at one time. It's quite advanced. But all I want to show you on this chart is that you've got these entry signals, absolutely. And they work, okay, no problem. So, here's your little exit. Got knocked out. Got a little rough in here, so the logic that said stay out missed this trade. But don't worry, not to worry. You get in here. And obviously, if you've got big price bars in 5 minutes, then your protective stop is going to be quite large, quite large. And a lot of people have a problem with that. Notice how, for example, here's our signal to go long. The initial hard stop is quite large, but then we tighten up, okay? But this is, I don't like the 5-minute chart. Now let's just go to the I don't need this now. Let me see if I can. Delete this, yes. Okay. What did I do? Are we still there? Hang on. What did I do? Okay. We do look at the 15-minute chart. And all I'm looking at the 15-minute chart for is not to trade off of, in as much as I just want to know, what's the big picture view here? I want to know. Can you trade off the 15-minute chart? Absolutely. I mean, I created this chart last night and I'm thinking, why am I not trading off the 15-minute chart? Right? Again, I'm showing this 315 because European traders know they start moving this stuff at that time. Okay. Let me move on here. A lot of Forex people like to trade, they watch the hourly chart and they watch the 4-hour chart. Here's an hourly chart of crude. And again, I'm just in awe of the signal generation. Absolutely, totally, 100% happy to share this. So if a person wants to trade crude using a small time frame chart and you're the type of person that says, well, I want to know always what's the hourly doing, what's the 30-minute doing, what's the 15 doing, what is my 5-minute doing. If you're that kind of person, no problem. No problem. Beautiful. Is there any other way to describe it? Okay, let's take a look. There are people that like to trade, how about a bond chart? I just want to show you I am not locked into range bar charts. If a person wants to trade volume charts, wonderful. Apparently that speaks to you, and I think that's great. You always trade with what speaks to you. So look at the bottom. Look at the bottom. The short master says cluster, and that's telling you, get ready, we could have a big move. Boom. Hello, bonds. Down you go. Cluster. Boom. Down you go. Cluster. Boom. Oh my gosh. Hello. Super run. Cluster. And down we go. Now here's one that failed. This one said we're going to go short. It had the signals. It didn't. It simply couldn't go down lower. What do we call that? Well, we just know that nothing in life, much less trading, is 100%. I know that, and you know that. Okay? But then you say, well, okay, I got, let's see, 1, 2, 3, 4 clusters, right? 1, 2, 3, 4 clusters out of 5, and only one didn't work? And I'll let you define a cluster. I look at a cluster as 3 of these things, but gosh, look at this over here. You know? It says go long. That's a volume chart. Okay? What about the 5 range bond chart? 5 range bar. Okay, well here, this is from September 15 to the 22nd. God, my gosh, it's a minefield. You know, the range was large enough to escape our no-go rules, but yet not large enough to make a move. So if you see that you have 2 losses in a row, that's when you stop for a moment and you say, wait a minute, either I am wrong or the market, you know, maybe the trader's being distracted, or you're saying maybe the market's just being a little bit rough seas right now. So this is what we do. We block it out and we say, you know what, I want price to resolve the issue. I have said that so many times, I should get a sweatshirt that says, just let price resolve the issue. Okay? Now, this is a 5 range bar chart. Okay? Again, if you are used to trading bonds on some other different type of chart, no problem. The system is going to work. So let's say you get chopped up and you're licking your wounds here, and then you get another signal, right? You see, okay, it finally broke up. Well, then you have, once we move out of this minefield, then you get a signal and it's like, okay, let's start all over, right? Nothing lasts forever, including tight ranges. Okay, now one of the beautiful things about this platform is the ability to monitor over here. So I'm looking at this bond, and yet there's a long signal in soybeans, the long signal in NQ, long signal in ES, long signal in the YM, short signal in gold, short signal in euro, short signal in crude. Okay? Maybe I look at this and say, are you kidding me? What else is going on? And I click and I find a chart that doesn't have this kind of a mess. Because with the software, I don't have to constantly look at a lot of different charts. I wait until I am signaled because this has pre-qualified everything for me. How easy is that? Right? You talk about a time saver. So great. You look at this and say, okay, well, either I'm not going to trade it, or, you know, as soon as I got in, they killed me, or something like that. Remember, one tick in bonds is $31.25, right? Absolutely. So this is an adult game here, really. I mean, all the trading is, but you know, you're not going to want to just sit there and say, oh, I'm getting a signal. You got to use common sense. And if it looks too tough, you simply say, well, my gosh, I've got other choices according to AgenaTrader. Right? Good. All right. Let's go to the ES. Get rid of some of this stuff. Five-minute. I know there's a lot of people that use time-based charts, and I'm not trying to tell you that you're doing anything wrong. I'm just trying to tell you that if you use a 5-minute chart, no problem. On a slow market, time charts, they can work pretty good. And if you're used to it and you know how to, you know, your expectations, good for you. You know, that's half the battle. Knowing your instrument, knowing the time frame. Look at this over here. This is lunchtime. Congestion. Typical. Okay, let's go to ES. 10-minute. I'm sorry, forgive me, 10 range bar. Now, one of the things about the ES, if you're expecting a move in the ES, we expect to get more bang for our buck in the Russell 2000 and the NQ. However, the Russell 2000, the volume is leaving that market. Sometimes it's good in the morning, but in the afternoon, I mean, I quit. It was my bread and butter. I quit because the volume is leaving that market. It will go to the CME in 2017. Now let's go through this just one by one, okay? So at 5 a.m., there you go, short signal. There was a long earlier right there. I don't know what time that is. This is September 26th. Still in the trade. Got another signal, so you either feel great about your trade you're in or add to the position. All of a sudden, here's where the thing exits. All right, long signal there. Comes and gets stopped out. So this is one that really didn't do that well. Gee, do we have losers? Everyone has losers. Everybody has losers. Okay. Diagonal trend line break. Long we go. Up. Here we are. And let me just see this. If I say, there's entry. This thing actually went up. You can barely see it. It had a nice tail. So for anybody that's like my friend 3-tick Charlie, or anybody going for, 5, 6, 7 ticks, they probably made a little bit of money. But if they stayed in that trade, it got stopped out. Then you got another signal right here. Okay, this would be another one where if you jumped right in, that one didn't work. That's 2 in a row. Boy, that hurts. And then all of a sudden, a glorious runner. Glorious. All right. There's the exit on the trail. But then you got another entry right away. Boom. There's the exit on the trail. But then you got another entry here. Run it up. Boom. We hit this area so much, so many times, that I've got it like a permanent resident on my chart. 2156.75. I want to know where that is because price loves it. All right, short signal, down we go. There's a trailing stop exit. Obviously, you could have got out earlier. And here we go, up again. Boom, boom. Where we go? Trailing stop exits here. Another signal. Boom. On and on and on and on. Now here's a short. Boom, 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 boom. Wow. There's the exit. This is a lunchtime trade. Coming back up, roller coaster. Boom, up we go. Trailing stop gets out right there. All right, a little bit of congestion here. Breakout lower. These trades where you see, okay, well this one was a clear loser, this one. But some of them would have gone a little bit, depending. If you're looking like me for larger targets, it was a loss for you. Smaller target people might have scalped something out of that. Here's a short, another short. So this short here is still in the trade here because no one closed above the trailing stop. That short there. So this means you feel great. Maybe you add to the position. Down we go. Boom. Okay. All of a sudden, take me higher. 4:30 a.m. Up with the market, up with the chickens. 6:45 a.m. Up we go. Boom. Incredible. Okay? Now, if you see an area where we have not taken a trade, that means that some criteria said, I don't think so. And we try to err on the side of conservative trading in a very risky business. That's the beauty about this AgenaTrader, the way you can program this stuff, and I like it. Okay, let's look at One moment. $15-minute chart, yes. Tell me again why I'm not trading this? I don't know. Wow. Okay, let's look at something else. Let's look at the DAX. Remember the DAX? 5-minute DAX? I'm sorry, forgive me. 5 range bar. 5 range bar. All right, here we go. $2:51 a.m. Octaliba. Here we go. Boom. You're in that trade. Now I hope no one gets upset that the trade signal didn't start at the very, very bottom. I hope that you're not that type of a person. Okay? This thing is working off trend and momentum, and you can see from over here this was a very strong down move. So the chart package is reading the RimesRangeBarSniper instructions, and it is basically saying, are you sure? Are you really sure you want to go long? Because you've just been in a very strong downtrend. And eventually, boom, boom. All right? Now this is a great example of the initial protective stop might have been too large for some people. And by the way, they do have a mini DAX. This is a big contract. So this thing says go, and then you get another signal, and there's a little breath of relief, like, hey, that's good. I needed to see that. And then it's all over, right? Boom, all the way up here. Incredible. Here's the exit, according to the rules. So we're never going to be at the very, very, very start. We'll never be at the very, very, very last tick end, because that is unrealistic. I know that, and you know that. All right. Now, here's a long, but you see it didn't go anywhere, right? So if this was a loser, that's one loser. And then a sudden, you know, more winners. And you're not taken out. Here's a touch, but not a close below. You are not taken out until here. This is the DAX. Short signal. Now notice we did not enter a short up here at the top. And that's intentional. How are you going to pick a top? But if everything lines up, then we get the signal. And look at this move. Here's the exit. All right. This is the DAX. You can also trade the Stocks 50. Let's take a look at the Euro. We trade the Euro in the day trading room, the live room. I tell you what, that Euro, you know what, I always look for a trade in the last hour and a half of European trading, always. What's the logic? The traders are clearing off the desk, clearing up positions, right? Especially on a Friday. So I'm always expecting a trade in the Euro in the last hour and a half, and then it can do whatever it wants. But always. So again, I'm showing these times because we have some Europeans in the audience. And here's your 240 signal, 250 signal, trailing. Okay, we got cut out of here at 3:39 a.m. Another signal to go short here. Love it. Down we go to Euro. Hello, Euro. Bye. You're going down, it looks like. Over here. What's all this? Cluster. My gosh, there's a cluster down here. A cluster. Okay? It's a big deal. Big deal. You talk about the more the merrier. I love the cluster. It just is that extra added measure of confidence. Nothing's 100% in life or trading, but the cluster is a great feeling. This is where the trailing stop got kicked out. So many times in the live room, we're looking for what? 8 ticks. Why 8 ticks? Why not, why not more? Well, we just started working with this package. We will expand it. But, we're watching the old-fashioned way, a lot of different charts. So it's like, okay, well, the easiest thing for me to do to show people is just go in and go out. Sometimes on crude we'll go for 8 ticks first and then we go for 30 ticks, okay? Or on the NQ we're going to go 15 tick profit and then 30. You'd be surprised how many times we hit that. But the trailing stop is one less thing you worry about. That's what I like about this. Talk about making your trading as close to what do they call it? Semi-automatic. It's like I don't have to worry, right? And if this is too large of an initial hard stop, I understand that, okay? Everybody's different. But it is initial. And then as we move up, we get close. Look, trail me close, trail me close, trail me close, trail me close. Look, no trades taken here on purpose. Absolutely. Absolutely. Great. All right, let's look at the, here's another euro. My gosh, a lot of annotation here. Let's see this. Whoops. Just want to make sure I'm not looking at the same one. No, I'm not. Okay. All right. This will make you become an early riser. Absolutely. My gosh, it's a cluster. It's a cluster. Imminent breakout. Ahead. Boom. Super duper. Okay, we got knocked out, 932, and then another signal at 955 going down. Absolutely. Trail stop gets kicked out, 1128. Next stop, take a long. Interesting. This is September 26th. All right, and then we go over here. This looks like, here's the 28th. The 28th, 4:45, 4:53 a.m. Going up. Don't mind me. I'm going up. Get out of the way. Trailing stop hit. Another long at 7:51. Boom. Trailing stop hit. No, I'm sorry. Another long here. Trailing stop was probably hit around this area, and then a short signal quickly given. Wow. What about if you're so conservative that you say, I'm not going to take any trade because it takes a lot of nerve to trade. I'm not taking any trade until I see a cluster. Hey, everybody has their own method of trading. I have no problem. If one person makes $600 and one person makes $35, I could care less. Both people are winning traders. The only people who care is your ego. Cluster of signals. Look at this here now. Cluster of signals. Let me get my cluster of signals tell us a bias is strong for a larger movement and or breakout is imminent. So maybe I just want to trade the clusters and forget about all this other stuff. Right? Why not? How do you make your trading easy? That's all. That is the number one thing I think about every day. How do I make my trading easier? Which is another reason I like the AgenaTrader. All right, let's look at another chart, and let's see, what do we got here? Gold. Did we look at? Oh, I looked at gold. I'll look at another gold chart here. And then we're about to wrap up. I've got some closing stuff to share with you. September 25th to the 28th, gold. All right. 11:24 a.m. Up we go. Let me get my all right, so I'm just ignoring this. Here's a nice down move here. Notice what we've got here. Market structure. Low, high, higher low. And there's your signal right at the breakout. Boom. All right. Now we got our trailing stop got us out, and then a signal to go short. My gosh. This is not a stop and reverse system, but many times the trades appear that way, but it is not a stop and reverse system. That is going through 16 criteria, and it's like, okay, go. The race is on. Boom. Enter. All right. Very nice. This is, I love to show a losing trade, because no one wants to talk about the fact that trading is risky, and no one wants to talk about your hard-earned money at risk, and no one wants to tell you that you are definitely going to have losers. So I like to show losers, because every time I see a loser, I know there's a winning trade coming right around the corner. All right? So here was this said go in, and then we come back down, and so it's here the CCI suggested trouble. Now you really got to know more about CCI, okay? But wherever it's all blue down here, that gives me an upward bias. We never went blue on that CCI. We never went blue. So, you know, the CCI said, hey, it might work, yeah, but it's I don't know. So just because you've got a system here with the RimesRangeBarSniper, you certainly make the decision, am I going to enter the trade or not? And even if you got losers here, this win quickly cured that. Now all of a sudden we go into this absolutely incredible minefield, right? So if the professionals don't know what they're doing, then you're being told, hey, let this resolve itself. Let this resolve itself. By the way, here's a cluster. Did you see that? You gotta, you know, whether you want to make your cluster 2 or 3 signals in a row, that's your decision. All right, 9:30 a.m., boom, here we go down on gold. Wow. Trailing stop got hit here. Another short signal here. Goes all the way down until right here. Okay. Two losing trades followed by a winning trade. And a time to add on to the trade. Right? Okay. All right. So I've shown you quite a bit here. Quite a bit. Let me get my, just a second. Erase. Let me get back to the program. Most people fail at day trading because they forget about thinking like an elephant. An elephant gets mighty big eating peanuts. The day trader capturing a series of trades and then leaving the game waiting for the next trade is happy, even if missing the trade of a century. So I want you to ask yourself the question, can you quit while you're ahead, or do you need just one more trade? Do you have to sit down in front of the computer all day? I don't. You've got to remember the professionals want your money. And the longer you trade, the more likely you will become a little bit sloppy. I tell you, the other day in the live room, I was late, and I'm thinking, I got to trade in front of these people. And my mind just was not there. And I think that's one of the days I entered without adhering to confirmation price bar, and I got whacked. Okay? So your mind has so much to do with the trading. It is a mental game. I honestly believe if you dumb down the trading and understand the money being traded is so huge that these guys have to keep it simple or they would not win. But we want to complicate. We want to think about the next economic report. We want to think about, well, what does this overnight action mean for the trading community? We want to, you know, left brain, right brain, front brain, back brain, top brain, bottom brain. So this is why the AgenaTrader, I like it, because I can be trading more in the moment, right? That's what I want to do. That's what we are doing. That's what you want to do, whether you realize it or not. If a trader makes $200 in a day, that's $1,000 in 5 days. 5 trading days in a week, 4 weeks of trading 5 days a week, making $200 a day equals $4,000 for the month. So this is the lure of trading. But once you start trading, and especially once you start winning, your mind becomes the enemy. So you got to be aware that your mind games exist. You got to thwart the enemy. You really do. People blow up when making money because the money came too easily, and a lot of traders, especially new traders, they simply lose control. What I believe is that this AgenaTrader will help to make a person who has a plan, has a strategy. I believe it will allow them to adhere to their strategy better, right? Not an automated system. I'm showing you semi-automated. You get the signals based on what I teach. And you are the trader in command. You can say, just losing it here. I'm not taking that trade, right? Or you can say, wow, what a trade. I'm glad I'm in that trade. It's never about a single trade. So if we trade as mechanically as possible, executing our trade as perfectly as possible, according to the plan, this is the first step when you start to conquer the trading mountain. It is the most difficult step. Automating your program into something like this AgenaTrader, what we've done here, what I've shown you today, this helps you stay on track, helps you to execute your plan. So start with small number of contracts and build regardless of your size, right? I don't care what your account size is, but always start small. You can always tell your broker, hey, I only want the ability for trading so many contracts, and I'll give you a call when or an increase. Or you use the AgenaTrader and you program that stuff yourself, and it will absolutely manage your risk. You say, hey, I only want to put 1%, 2% on a given trade. You hit the order button, and that's automatically allocated. Okay? So this really is next level. All right. And remember, in our kind of business, broker imposed limits, like a daily risk level, you know, you tell your broker, hey, if I lose $1,000, you know, shut me down. I can't help myself. Shut me down. This is not an accurate stop-loss order. Not at all. Markets move fast. Communications break up. Okay? Now remember, the freedom of the day trading mind, right? We buy into that dream of financial freedom through day trading, but the reality is this is a very, very tough business. Chance does favor the prepared mind. So control your mind or stop trading immediately. Focus on mechanical trading. Now, we looked at the package. All the charts are created with AgenaTrader. I want to just remind you that I use the range bars, but it's good on any time frame, on any instrument, and I don't care what type. If you want to use, if you want to make it where one bar represents, you know, 19 minutes, whatever you want to do. The system is robust. Let's go into, let me look at my time here, 68 more, sorry. Know your numbers, know your number of consecutive wins, your number of consecutive losses. Do this for trend and counter-trend strategies. Know your win-loss ratio over a period of 3 months minimum. I'm not going to ask you to complicate your record keeping so that you have to keep every single statistic, right? Because you won't do it. Some people want to know what was the maximum favorable excursion, all of that stuff. If it speaks to you, great, keep the numbers. If you are not good at record keeping, you just don't like the detail, you must keep this basic, because this is how you build a track record. This is how you build knowledge of what's winning or losing according to your pattern, right? According to, I like to look at the time of day, the day a week. Okay? All right. Let's see here. Now, ideally, you keep the numbers on each type of trend trade and each type of counter trend trade. And that tells you, should I be a trend trader or a counter trend? Should I just, kind of do both? I do think it's important to know the average profit per trade, the average loss per trade, and then you look at the chart of your losing trades, right? And you try to find out, by looking at this, you see patterns. You really do. And question, what is the basis of your protective stop? Gosh, there's so many day traders that are trading with a $2,000 account, and they're thinking they're going to trade an instrument like gold and use a 6-tick stop. Well, 6 ticks in gold is like a sneeze, like a blink of an eye. So you've really got to know your instrument. You really do. You really do. And then you're going to, if there's chop, it's going to kill the small tick protective stop strategy. Just it'll murder it. All right. If you know a little bit about your instrument, you can see that, hey, it tends to move at least so many ticks, right? So many price points. So just work around that. I'm not saying you've got to keep detailed records, but just get a feel of what you're working with. Now, protective stops are very personal. It's like Goldilocks and the Three Bears. And you have to follow a stop that speaks to you. I promise you that trailing stop on the RimesRangeBarSniper Package, that trailing stop is the best thing I've ever found. It really is. If it helps you, terrific. Base your stop on mechanical chart action rather than emotion. I will be managing trades discretionally in the live room, and I'll say, now look, I'm ready. This trade has done enough, more than expected. I'm ready to leave the party. I'll extend the profit target, and I'll tighten up the stop only because I'm ready to leave. That's a lot of work. Or sometimes I use a time stop. What's a time stop? I say, okay, I want to be done at 11:30, period, the end. I'm out. And then I told you about 3-tick Charlie. Happiest trader I know. So, this is an older slide here, but on one of the trades in the Russell 2000, I wanted 15 ticks because 15 ticks is another blink of the eye deal for Russell 2000. Well, the trade ran 10 to 13 ticks, and it quickly took me out minus $100. Okay? So anyone who wanted 5 ticks, 6 ticks, 8 ticks, 10 ticks, they all made it. It was a winning trade. But I thought about 3-tick Charlie, right? And we conducted an experiment once finding that 90% of the trades we call make it a minimum 5 ticks. That's huge. Wow, that sounds like a nice strategy. So when you program your strategy and then you tweak it and then you see what I've shown you on the AgenaTrader, then you realize, wait a minute, my strategy works, I'm just not willing to let it run, right? Now I do think you should log time a day and day a week, and you should just keep a running track of that. And if you find all of your losses on a certain day or a certain time, guess what? Stop trading during those periods. It's no secret that new traders make money in the morning and lose it over lunch. That's no secret. No secret that Monday and Fridays are slower than other days, especially in the summer. All right. I think day trading is best for visual traders who can react with a quiet confidence, knowing losses are part of the game. Keep the charts clean for faster decisions. And you've got to really appreciate the day trader is no different than a professional poker player. It's not each hand, but a series of hands played that determines the outcome. Okay? I want to thank everyone for being here and your patience. I want to thank our host, AgenaTrader. I'll take questions. You can sign up for a free trial, AgenaTrader. You can go to my website under Clients and Resources. And if you're interested in Rooster Call, you can sign up for that too. All right, let me see if there's any questions. Let me see if there's any questions. Wow, long presentation today. Am I in the right place for questions?
Okay. I don't know if you see the questions. I just will go through the list. There are not many. Just a moment.
Okay.
Excited to see what you have been doing.
Please show me an example of a trade that failed and how you managed it.
Okay. Do we see it already? Okay, fine.
Well, usually if it's a trade that fails, it means I just took the loss. That's all that is. And a lot of times what I will do is I will let my, in the discretionary trading, and look, on the discretionary trading, we take the trade and then we look at the AgenaTrader and it took the same trade. You know, so that's good for me to know that the methodology is being communicated. But in an example, let's say over here, where I've got this I would have probably if I was in this trade, keep in mind this is early in the morning, so that's why no one's probably trading then. It's super early in the morning. But if this was a trade, and this would have probably been a good signal here to go long, I would have probably taken probably a $200 stop, you know, $200, and then I go on, you know, you go on. Okay. What is the name of the tool on the left side of the chart that analyzes other markets? I'm not good with my nomenclature. I'm not. I think this is the. I'm just used to that journal term trade escort. But this is a screen that is going to be running live with you and just monitoring your whole system. Let's see. You're welcome, John. Are your trailing stops done by the program? Yes, they are, Michael. Okay. The cost of the program. Well, I'm doing this thing exactly the same price of the live room. Okay, $150 for a month. But if a person wants to pay for a whole year in advance, then you get a discount, introductory special, a discount of 2 months. So it's like you pay for 12 months, but you're really only paying for 10. Okay, so there's the discount if you pay for the full year. Otherwise, it's exactly what I'm charging for the live room. It's $150 a month. Let's see what else. Hey, Vivian, I'm glad to see you are here. Okay, Greg, Carolyn, glad you guys are here. Okay, let's see here. In your live trading room, are you only using your AgenaTrader? Are you only using AgenaTrader platform for training education? I'm migrating to that. Yes, I'm migrating to that, and I will be only using that. Absolutely. But you know, as a discretionary trader, I've used another platform just for over 10 years. So I'm like anyone else. You trade with what you know. But this AgenaTrader in the RimesSniper Signal system, it's just, I don't think I would want to use anything else. So I'll be working with just this chart package. Is it possible to show a live chart example in the YM and explain short words for your opinion what trading strategy? Okay, strategy showing. Well, let me just see something here. This is the a live chart of crude. So, wow, live. Let me just get this going. And so here's the last signal right here, okay? Here's the last signal. Just want to point out there's a lot to be said for these clusters, okay? There's a lot to be said for these clusters. There really is. Because you see this kind of stuff and you're saying, you know, I usually tell people wait for this to resolve itself. Well, the clusters are showing you a building pressure. The pressure is building, and you're being given a sense of what the direction of the breakout is going to be. I think this is the real secret of the program, is this cluster. I really do, especially for trading more conservatively. All right, so for the European traders, you had a signal here. It looks like, I don't know, 6 o'clock in the morning. And maybe 7. We always look for a move at 7 a.m., 9 a.m., and 2 p.m. for crude. Let me, I want to switch to the YM, but I want to let you know that my internet connection at the house is extremely weak. Okay, so I had to, I just recently went and got an office because it was too weak. Let me clear up this chart while that's loading up. And I want to answer another question here too. Seems like someone with a small account might be better to use a long term such as 30-minute or longer and try to line up with a 10 range bar or 512 tick. Marvin, it's good to see you in here. That's absolutely. 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 I mean, this is a business where it does definitely take money to make money, but yet having money doesn't mean you're going to be successful. So you just trade in simulation until you feel that you've got that track record. Do the cluster signals show up soon after the trade begins? No, they're actually prior to. Okay. So for example, what I'm showing now, we got this cluster. If you'll, let me get my marker. Where is the marker? Okay. So these are, this will correspond to the arrows, okay? So you got, you know, this is only 2, by the way. This is just 2. Oh gosh, I'm covering it up. Just a minute. So this is only 2, but yet I had another one over here, okay? And then these 2, and I'm thinking, you know what? We're not going anywhere, and I'm getting this 2 in a row here, and geez, you know, if you know, we were a downtrend, so it just gives me a little bit of a bias that it's going to go down. So obviously the number of signals you have right in a row, like if there had been another one, say right here, okay, I feel that even a greater probability this was going to follow through, absolutely. But as it is, this is just 2. And the question, the reason I highlighted it is it was to just show you that when you're looking at these clusters, you know, you have to say, well, I'm happy with 2, or I'll wait for 3, you know? Because if you're waiting for 3 and you only got 2 here, you missed the move. But what else can you do? Okay, you see the signals, and then you look at the chart and you say, well, this is kind of sideways, so, you know, draw the lines. Because here's the entry bar right here. And that entry bar blew through the floor. This is a CCI signal, by the way, the diagonal trend line break. That was one of the, you know, absolutely. All right, let me get rid of this. This is the YM. I'll come back to this. Now, this is a 10 range bar, and we got cut up on the 10. So I've changed this to really watching the 15. And when I say cut up, what I mean is that price would whip against us and then continue moving in the intended direction. So that's why on the YM, I'm using a 15 range bar. On the NQ, I will use I use 25, but 20 is perfectly fine. 20. So let's just say on the NQ, the deal is 20 to 25, okay? And then the ES is going to be 10. And I'm talking about range bars now. Range bars. And then the TF, I haven't taken it very in a while, but the TF, when I was trading that hot and heavy, I treated it like crude. I watched a 20 and then took entry on the 10 range bar. But I traded one afternoon and I had a 5-tick slippage. Well, that's $50. Just the slippage. And I use market order. And then in one blink, I was down $250. And it's like, I called the broker. What? I said, you got a problem with your data feed, man. And but I saw that the data was correctly. I compared the data, another feed, and I was told, no. All the retail traders are bailing on the Russell 2000 because no one wants to pay the higher monthly data charge. So if you try to trade in the afternoon, you might feel like you're playing tennis by yourself. You're hitting the ball and there's no one there, so you go to the other side of the court, right? All right, so in this chart of the YM, here's today. Typical Monday. Typical Monday. Look, you know, tight market. If you get a lot of signals, then that's kind of evidence that maybe, you know, a lot of signals and not going anywhere. That's kind of evidence you should look at another range bar. So I would probably suggest seeing if the 15 was a little bit better here. Otherwise, you can see the trades being taken, absolutely. Here's a little bit of a cluster here. So we look up and we say, okay, let's see here. Yeah, there's a little bit. That's 1031, I guess. This is typical Monday. Typical Monday. The trading will be better on Tuesday, absolutely. Anybody trade old-fashioned? This is a head and shoulders. Here's the entry signal. I like that. That's one of those European trade deals. Let's look over here. Here's 1045 right here. Okay. Here's two of these right in a row. So we got, I don't know. Let me get my, okay. The first signal is at 1052 and another signal here at 1058. Nice. So look at the protective stop. You're in, and then, let's see, you went down, but you did not, well, no, there's a red bar that might have got you out of that trade right there. If it closed below that protective stop or on it, you're out. That's nice. All right, here's wait. Here's a little bit of a cluster here. So all you're being told is, hey, something's going to happen. Something's going to happen. And the bias is up. Okay? I'll say. Now, this is one reason we don't like the 10 right here. Right, exactly, right here. See this? Stopped out. So I'll change this and see what happens. Just a minute. Normal drawing tool. Now, you know, you can have this all preset in here, whatever time range you want to follow, okay? Whatever you want. And then over here to the right, look over here to the right. I can just draw this down, and it will also change it, you know. So if I want to be, you know, lazy, I just move this down, and it's going to, it'll basically replicate going down this right here, okay? So I don't have 15 loaded. Oh, no, I don't have 15 loaded on this one. So I'll just change this. Pretty easy. And I'm going to say OK. And let's see. Again, my internet is quite slow. Let me see if there's anything I can show on this chart while they're doing that. I don't know. I mean, for those of you that know me, you know what we're doing here, okay? It's just that the filters are in here. The filters that you acquire after years of trading. And you know, my commitment to this package is, see that? And down we go. My commitment to this package is that, you know, I know markets can change. I know market can change. So therefore, I mean, if I'm using this and markets are changing, I'm going to be making some changes. So I will be obviously updating any changes to reflect whatever's going on in the market. You know what I mean? And I want to also, for anyone who's going to use this, I kind of feel a responsibility to help you. So I'll probably put it out once a week. You know, it may say, okay, look, we've got a big setup here on the daily chart, so we think that this might be some good day trading for gold or for ES. And if it's ES, then by extension, we expect a big move out of the Y and these other guys. Or maybe, you know, the chart suggests that we're going to have a big move in, I don't know, whatever commodity we might be looking at. I mean, we took a trade just now. We're simming this in the live room, right? On this AgenaTrader, and we got the signal in sugar. Now, I don't know anyone that really day trades sugar, but wow, great move. You know, you can also day trade coffee, of course, but in the list, you don't have to have every single instrument. If you want to have is 3 instruments or 2 instruments or 1 instrument, that's up to you. You want to have 100 instruments, that's up to you. I don't know how you're going to keep track of it. But what we've been doing to test this system out is just taking every single trade, you know, or, you know, sometimes I'll look at it and if it's a situation like this, well, for example, like this right here, where it says danger, professionals have no idea. Well, that's get a signal, and obviously, you know, I'll say, well, I'm not taking this. All right, let me see if this goes some more questions. Here's the 15 range bar. Before I forget about this. Now, this 15 range bar, to me, making this 15, all it does is it lets you know if price is really serious about a move or not. That's all it does, right? Instead of vacillating back and forth, now you're saying, well, don't print unless you got at least 15 tick movement in your range, right? So I think this is a lot smoother. And the reason we went from 10 to 15 was because we were losing, okay? We were losing. So, you know, you have to adjust. You simply have to adjust. There's my daily sales call. And I'm on the do not call list. Okay, so here's these are just some great trades over here. Now this is the European trader, okay? This is all Europe. 4:30 in the morning, 4 o'clock, whatever this is. Here's the signal here at 6:30. You know, breakfast with the YM, that kind of deal. Here's today's trading, and this is, again, I think just typical Monday. Typical Monday, you know. They started taking this thing down, it looks like at 5:30 in the morning, and then we just kind of went sideways. And I'll have to look at this no-go rule as well to make sure, you know, if I see something, because I'm working with this every day, if I see something that doesn't look right, I'll be telling the programmer, hey, you know, maybe on the YM, we need to widen this. I don't want to do any changes capriciously, but at the same time, you know, the logic here is 2 of these bars, he doesn't want to take the trade. But when you break out of the 2 bars, he takes the trade, and that's why he did it here. Okay? That's the logic. Well, that just happened to work. And the protective stop, I think the protective stop still has you in, or no, I'm sorry, the protective stop took you out right here. Okay? So obviously, you know, if you know anything about support and resistance, I'll be telling people in the room, okay, they're going to treat the low like, you know, like a pivot. And sure enough, you test it, and then you go back up. You test it again, you go back up. This is what they do. This is not humans. These are machines. So we can read the footprints, and we simply respond. Now what it looks like is also that we've captured, you know, we had a high here. Whoops. Hang on. I'm not sure if they're recording this. I pray they are. We had a high here, and we had a retest of the high here. I would call this a nickel and dime market. All right? And I would call it typical Monday. Absolutely. Typical Monday. All right. Let me see other questions. Hey, Greg. Great. I look forward to getting your email. Will this Agena software work on your charts? No. The Agena is a separate chart package. And at this point in time, I've only got this coded just strictly for the Agena. And I feel very comfortable with the technology. I don't want to mention a chart package, but I'll tell you that when the data comes in, it is up to the chart package to formulate the bars. Got it? They get the raw data, the chart package formulates the bars. The AgenaTrader is very efficient in the creation of these range bars. And that's one of the reasons I'm so big on it. So I might get a signal here on this AgenaTrader that doesn't show up on, and we've seen this in the live room, that doesn't show up on my other chart package, which uses a more antiquated language. So everything about being new, kid on the block, being more advanced, it seems to be true with this AgenaTrader. All right. Win-loss ratio. Well, Lennon, we're working on that. But for now, as I mentioned, according to the way that this is programmed, as a very general rule, we do not expect to have more than 2 losses in a row. Okay? As a general rule. And I am hesitant to state a win-loss ratio because how I trade will be different than the way a lot of people trade. But we have demonstrated a pretty high win-loss ratio. Do you consider any higher time frames for trading signals? Good questioning, though. I do look at the weekly charts. I look at the daily charts. In the morning, for preparation, I'm looking at daily chart and 15-minute chart. Okay. I think we're running over time here. I want to apologize for that, but we did get started late. If I have not got to your question, I would like you to either write me or Okay, they said they're not recording this. Oh my goodness. We will repeat this. I'm sorry about that. Let's see here. If I didn't get your question, then I'm going to apologize, and I'm not avoiding anybody, but I want to respect the time. Okay? So, as far as data feed, you gotta bring your own data feed to the party type deal. I think they work with everyone. So, I apologize for going over on the time. When we do another one of these, we'll certainly record it. And Greg, I see your question. Kevin, I see your question. John, I see your questions. It's a question of it's 2:20. So I'm going to let everyone go, and I appreciate your attendance here. I'd like you to go to AgenaTrader. You can go to my website and go to AgenaTrader, and let me see. Got a message here. Oh, they have recorded it. Okay, that's good. That's great. So, you'll be getting stuff. If you've attended this session, you'll be getting more stuff about purchasing this thing. Okay? Appreciate the interest, and I will talk to you later. Bye-bye now. Oh, Gilbert has some ending words. Forgive me. Gilbert?
Yes. So many thanks, Martin, for this great presentation. I think you cannot hear me. I'm just switching on Skype, calling you via Skype. Did you hear me? So hello, Martin. Now you can hear me also. So many thanks for this great presentation. It was really very interesting and very exciting to look at this whole package and all this information you gave to our audience here. Yes, I'm really looking forward to start with this package now. Yeah, you already mentioned how it works, and just a moment, I'm just switching over to my screen. Yeah, I think now you see my screen. Yeah, I just wanted to mention that on Thursday at I think 4:30 Eastern Time and 10:30 p.m. Middle European Time, there is the follow-up of the presentation of the platform. Martin has shown a lot of stuff today, has given extremely much information, how signals are working and so on. I would like to show you how you get this stuff really working and how you can work with such signals in real time and how you can set up the platform. I just give you a brief information, just short overview what is really different to other platforms with AgenaTrader. And Martin already mentioned that in AgenaTrader you can manage your risks and everything like this, and you can really save time and you can trade on time when the signal is coming in. And I've just prepared some charts here and some lists. I mean, I'm currently in the stocks here. I just show you what is really the advantage. For example, you see here we have about 260 instruments loaded now in the different scanners. And you see a very few signals, and they are not coming out of the RimesRangeBarSniper Package. They are just other signals. But I just show you what is really the big difference to other platforms. So you should really stick to your signals, and when you get a signal, you get it in the scanner. So we have about 260 instruments open, and you see a very few signals only in the scanners. So, but there are always new signals there, and every 5 minutes there are new signals, or every 15 minutes or every 1 hour new signals are coming. And the big advantage is that you can just look at it, you can just sort them if there is any signal in any time frame. And for example, here you see in a 5-minute chart, you see a signal. And the big difference and the big advantage is when you see such a signal, you just click on it, you double click on it, and you immediately get a complete setup placed into the chart, risk managed. And just think about what Martin just has shown to you. So you're getting a signal out of his package. You just click on the scanner. You just look at it. Does it fit to your risk criteria? If it does not fit, for example, if you would like to move the stop somewhere else, you just move it somewhere else. And you have seen we have here the order size. And the order size got just changed because you just moved the stop away from the market. If you just move it to the market again, you see immediately that the order size is changing. You see immediately that there is the risk overs, where you're into. You see the profits you can make out of this trade. You also can move, for example, if you would like to get in somewhere else, just change the entry and say, okay, now I'm getting 500 proposed out of my risk management and something like this. So this is just that you see where the journey is going on the next presentation on Thursday. And if you would like to go, here is another signal, for example. You just hit the button there. You get, again, this signal here placed into the chart. And if you would like to get in here, you just hit the button. And how you program this is also very simple. These strategies, if you would like to change the stop or something like this, you can do it very, very easily in different tools, like in the condition escort, for example, where you can program your signals or maybe combine your signals with Martin's signals and something like this, where you can just drag and drop programming and something, all this kind of stuff. So this is just something I would like to show you in the next presentation on Thursday, how you can work with this platform, how you can deal with Martin's package, and so on, when you get a signal, how you can get the signal into the charts and into the market and that it starts working. So this is just something, a preview, was just a short preview to the to Thursday's presentation I would like to give you. Yes, on this side, on this point, I really would like to say thank you about spending so much time for this presentation. It was really a pleasure to have so many people here on board, and I'm hoping, and again, many thanks to Martin for this great presentation, and I'm hoping I see you, a lot of you guys, next Thursday, this coming Thursday at 4:30 Eastern Time or 10:30 Middle European Time to see the presentation, how to work with AgenaTrader and why AgenaTrader is different to all the platforms you have seen so far. Yes, have a great, I think, afternoon in US, and have a great evening here in Europe. See you soon again. Many thanks.